여보 보고 싶어 다 부질없어 You got me like 이건 아무 감정 없는 love story 어떤 설렘도 어떤 의미도 내게 미안하지만 I'm not sorry 오늘부터 나 I'm so low 나는 so low I'm going so low, 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 low I'm going so low, 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 low
Technical analysis is a method of evaluating a security by analyzing statistics generated market activity, such as past prices and volume. Technical analysts do not attempt to measure a security's intrinsic value, but instead use charts and other tools to identify patterns that can suggest future activity. Technical analysis involves the examinations of historical data on prices and volume to determine future prices on the basis of trend. Technical analysis is the study of the action of the market or market behavior through the prices and the volumes of share transacted. It is the science of recording the actual history of trading. These recorded changes in prices and volume transacted are transformed to other types of data such as average and further expanded to graphic forms. The Doe theory. This first key historical figure in development of the technical analysis theory is Charles Doe, the founder and first editor of the Wall Street Journal who died in 1902. Doe originated the basic approach of using stock market average to predict future movements in the market. His ideas were later expanded by Robert Rhea 1932 and called it the Doe theory. The Doe theory is a technique using charts to predict the overall market and to guide portfolio composition. The Doe theory is a body of techniques that have been developed partly based on empirical observations, partly based on intuitions to identify the primary trend in the stock market. Basic tenets of Doe theory. From the writings of Doe on stock market, there are several conclusions that can be made on the price behavior of stocks. There are 6 prominent conditions as described as follows. The first one is the average discount everything. The second one, the market has 3 trends. Following with major trends have 3 passes. The fourth one, the average must confirm each other. The fifth one, volume must confirm the trend. And the last one is, a trend assumed to be in effect until it gives definite signals that it has reversed.
What is the criticism of Doe theory? First, the signals are too late. The major criticism of Doe theory is its slowness. It missed about 25% of a move before giving signal, primarily because it is a trend following system designed to identify existing trend. Second, it is not infallible. Investors have to use their own skill to interpret the charts. This leaves a lot of room for doubts. Third, it does not help the intermediate trend investors. Changes in the intermediate trend cannot be interpreted well in advance because the theory is mainly concerned with the primary trends. The theory does not give any warning to the intermediate trend investors about changes that happen. Last but not least, which is the fourth, is trading is not done on average. Doe theory does not and will not inform you which stocks to buy or to sell. Next, the philosophy of technical approach.
In investment, there are 3 philosophies of technical approach that you have to know. The first one is the market discounts everything. What is the meaning of the market discounts everything? Technical analysts believe that the market price discounts everything or anything that can possibly affect The market price is reflected the price. The factors that influence the price includes the fundamentals, political, social, psychological, and anything that may influence the industry. The second is price move in trends. Technical analysts believe that prices move in trends. It is this development that must be identified early in order to take advantage of the situation. And the last one in philosophy of technical approach is history repeats itself. I think you never know about this. Okay, let me tell you. Technical analysts believe history repeats itself. Understanding of the psychological makes up the market. Behavior will definitely help the technical analyst to picture the trend, whether it is bullish or bearish. These patterns have been repeatedly involved in the past and they are assumed to reappear in the future.
For the third subtopic is advantages of technical analysis.
There are 3 advantages of technical analysis. First is timing. With technical approach, an investor can know when to enter and when to get out of the market. Quite frequently, the market does not reveal much news for investor to make the next move, but technical analysis, investor can spot the buy or sell signal. Second is flexibility and adaptability. Technical analysis can be applied in any stock market of the world. And lastly is applicable to different time dimensions. Technical analysis can be applied within a trading day where minutes or hourly chart can be constructed.
We are going to continue with criticism of technical analysis.
Much of the criticism of technical analysis has its roots in academic theory, which is specifically the efficient market hypothesis, which is EMH. What is EMH? This theory says that the market price is always the correct one. Any price trading information is already reflected in the price of the stock, and therefore any analysis to find undervalued securities is useless. There are 3 versions of EMH, which is first is weak from efficiency, second is semi-strong from efficiency, and the last one is strong from efficiency.
The first tools used in technical analysis is bar chart. Each day's activity is represented by a vertical bar, which represent the high and low of each trading day. The top marks the day's high price and the low marks indicates the low price of the day. A horizontal tick to the right shows the day's closing price. Recently, bar charting has incorporated the opening price. By other small tick on the left side of the high-low bar. Most bar charts are displayed with a volume histogram at the bottom.
The second one is line charts. Line charts are the simplest form of charts depicting price changes over an interval of time. Usually, only the closing price is graphed depicted by a single point. The series of these points constitutes a line, hence the name. However, intraday price changes can also be plotted, either by plotting each trade or by selecting the last price of a given interval, such as an hour or 15 minutes. Because line graphs are very simple, it is easier to compare the prices of multiple securities or indexes on the same graph.
Okay, next is point and figure chart. This chart is said to have been used by Charles Doe. The chart is almost similar to a bar chart, but it incorporates the price movement within the day's trading range. The point and figure chart that records the sequence of transactions that occurs within the trading day is called an intraday point and figure chart. Modern point and figure chart are drawn with the X and O's, where column X are rising in prices while column of O's is falling in prices.
Another type of chart used in technical analysis is the Japanese candlestick chart. The top of the upper shadow represents the high price, while the bottom of the lower shadow represents the low price. Candlestick patterns are most useful over short periods of time and mostly have significance at the top of an uptrend or the bottom of the downtrend, where the patterns most often signify a reversal of the trend. Candlestick chart emphasize opening and closing price. The top and bottom of the real body represents the opening and closing price. The opening of the closing price depends on the color of the real body. White real bodies indicate bullishness, while black real bodies indicate bearishness, and their pattern is easily observable in the candlestick chart.
And lastly is on-balance volume. On-balance volume or BV measure buying and selling pressure as a cumulative indicator that adds volume on up days and subtract volume on down days. OBV was developed by Joe Granville and introduced in his 1963 book Granville New Keys to Stock Market Profits. It was one of the first indicators to measure positive and negative volume flow. Chartists can look for divergence between OBV and price to predict price movement or use OBV to confirm firm price trend.
And the last subtopic we want to discuss in technical analysis is comparison between technical analysis and fundamental analysis.
For fundamental analysis, they use top-down and bottom-up approach.
In technical, they use chart to analyze the market.
For fundamental analysis, it useful in deciding what share to buy or sell.
In technical, it useful to deciding when to buy or sell.
In fundamental analysis, it determines how the investors see the traders.
While in technical analysis, it determines how traders determine the investors.
For fundamental analysis, it to gauge the long-run values of securities.
While for technical analysis, it is to predict the short-term price movements.
Okay guys, so that's all the subtopic that we presented to you in chapter 9, technical analysis. Okay, so my friends,
Thank you for watching!
please subscribe and
Give us a thumbs up to this video.
Bye!
Biar kegelapan menyerang dan cahaya terus menerangi. Let me see you smile, let me see you laugh. Let your worries go away and never come again. I wanna smile with you, I wanna laugh with you. We never know all the good that a simple smile can do. Whoa.
Price.
About 35%.
Yang tempoh kan
Yang sim subtopic apa sih?